Welcome to our first webinar of this year. But if you haven't attended our previous webinars, I strongly suggest you go back and have a look either in our YouTube channel, which is Bachu. We just uploaded a lot of our previous webinars there, or you could simply go to baachurain.com/events, and you could have all the recordings done by sectors, by services. Obviously, every year, every 6 months, we give an overview of the market, where it stands, any important things that you need to remember, and this is one. But obviously, within public sector, there is a lot more there. Within private sector, there is a lot more. And within hard, soft, and integrated, a lot happens. And within cleaning, security, and you name it, a lot happens. So we kind of slice and dice the market in different chunks. Please do go and familiarize yourself with the content there. It will be helpful. So in the meantime, as I pointed, I have begin the recording. So I hope you're okay with that. And secondly, please to introduce yourself in name and company in the chat so that we can know who's there. And if you some have noticed that your name is the laptop name. So we don't know who you are, but it'll be nice if you can say hello. I know it's a friendly group. So say hi, Dennis. Thanks for sharing. So yeah, please introduce yourself as we begin. So who we are, if you've known, different people see us differently. Some people see us for market strategy. Some people see us for bid and estimating support. Some analysts use us for due diligence of the acquisitions, and some just want to know where the market is, they download the report and etc. So our identity depends on who you are, and we won't actively go and say, hi Dennis, hi Phil. So we won't actively go and say, this is who we are, this is what we do. And over the years, we have done a lot of operational work as well. So primarily, this is us. You could find more about us in our website. So if you are your sales and BD people, this is what mostly, here we go, help us to boost the pipeline. We have a team, we have a search support on paid or estimating. And also, hey, what can you help us to build the pipeline? All these things come up. So we over the years, we have done 45 plus pipeline projects, and we consolidate all our contracts into this dashboard. It's at the moment is rebranded into Bachlens. It's very similar. Unlike we have private sector and public sector. We have buildings data, PFI data, tender alerts, and everything is there. So it's not really well known in the market because we haven't actively shared it, but it's available just to help the people. Strategy marketing team, obviously, they are not actively involved on the growth, but they do want to have a sense the market is. So, they just one of those colleagues who just understand how anything that they're pushing to the wider market aligns with what the big team does and also the operations does. And we kind of work with them on that thought leadership. And it's because of that we came out with all the reports. We were very reluctant because there are already research companies who do these things, but they are, as very high level. And if you scratch the surface, it's all based on their own assumptions and XYZ. And most of them interview you and then go back and sell it back to you. So we end up publishing it, and we kind of displaced many of the wider wider reports companies through our. That's it. So this is our popular report, gets downloaded at least 5-6 times a month, and then people download it, and then we go back and fill any data gaps, fill any further research on that. So if this is like £995 compared to $4,000, that's CEOs is interesting because obviously when the market moves, they want to have a trusted advisor because sales team is busy, strategy team, big team, they all are busy. But hey, every now and then, can you come back and share what's happening? This is the company I have in mind. Can you give an insight about what this culture is? Pieces again, very, very kind of trusted. When you say trusted, it's very trusted, so very confidential, and we kind of help them with that. And then based on that, we launched this because there were so many frequently asked questions. This is £1,000 a month, frequently asked questions about, hey, what's the contract size in the local government market? And is IFM really the best thing to do? And what are the 1 or 2 things that we need to remember? Office and commercial buildings, and who's the top 7 commercial agents, what's their presence, etc. We just wrote articles, we just wrote insights about it, and we gave it out. So what that meant is, we refresh that every year rather than we go back and do so. So memberships was launched, obviously very, people are much more comfortable buying one-off content, but as you know, the market moves on. And if you want to get regularly updated, the report is £1,000, membership is £1,000. It comes to the report. So we always tell people, hey, why can't I become a member? You get the report plus any webinars that we do as well. So again, if you have any kind of questions that you have on the market here and there, most of the questions, the insights will be there. Buyers is interesting because what we didn't realize was when we initially started with suppliers. I know some of you are from the buyers here, or people who will be looking into the recordings. Many of them will be buyers, because in this registration, nearly 23%, it was 104 as I looked at 10 a.m. today. And there could be a lot more because Dennis and his team kindly published the article today in FM Business Daily, which meant there was on there. Then IFM friends will get to have something later. So what it meant is, we were surprised 23% of the registrants were buyers. Obviously, what it meant is when we touch the renewals and stuff, buyers are, I would say, desperate is not the right word, but they're really looking for new breed of suppliers who they could engage with. What that poses a little challenge on the renewal side for you, but they are looking at trends and challenges. They are willing to educate themselves a lot more than what we used before. And there are colleagues here, very, very smart consulting companies who advise these buyers on how to do procurement, etc. We have our close friends who are joining today. I mean, we are going to work with them to just entice a lot more buyers to buy, so that they could work with a lot of good suppliers rather than they procure something and then it didn't work and then it goes on with that. So again, we have friends who joined from their benchmarking is something that we do to understand who they are. Investor analyst relations, this happened after Carolean, where a lot of companies who invested on post Carolean. They just used it for due diligence. And also many companies, many analyst organizations who are going through acquisition, yes, they get the high level, they want to due diligence on the pipeline of the joint entity, or they want to understand about how the collective market positioning of this entity use us to stress it. Again, we are there at different levels, but most of the time we are hidden and nobody knows. This has all happened a year and a half ago, post COVID, when everybody wanted to do refresh the asset register, PFI, which we'll touch. The biggest thing on the PFI is the asset register, asset consolidation, where we started to use our data benchmarking things to just get those things moving as well. So the reason for this is you might see us differently. Even we don't know how to position ourselves. Different people perceive us differently, and that's where we are. So that's the high level who we are for people who are not, because when I didn't list. Normally, we have close friends who join from the industry, predominantly supply driven. But this time, the suppliers were less than 10-12%. And mostly it's the people who we haven't worked with before. So I thought I'll give you a good introduction on that. So we started to focus more on this element because there are a lot of high level pointers, and companies rely on this data, and then once they realize that's not actually the right, they just come to us. So primarily, this is the high point. UK is there. The FM market is pretty robust. US is big. Europe is next. With Europe, UK is big. After UK, the next biggest is France, Germany, and it goes like that. But the most exciting thing happens in Asia Pacific and Middle East, as you know. So broader companies, especially, that's where you're finding more and more bigger providers. They all are going at what we call a global deal, or at least regional deals, rather than UK specific or Ireland specific, which used to be. That's one interesting trend that we are looking at, where bigger players. What that meant is the pure play UK suppliers missing out on these global deals because they don't have the capacity to serve, say, Europe or Asia Pacific, etc. So it's there, But UK, as you know, is sophisticated. Sophisticated means it's much more commoditized. That's where and the point is there. So if you are looking to keeping an eye on wider eye, I always suggest, if you're existing supplier or your existing buyer, if you are a supplier, if your existing buyer has a global presence, it's worth looking into what could be their renewal way, so that you are not lost out. Even though you could be a good provider, you are not lost out. Similarly, if you are a buyer who are at the moment going international, you might be missing out on very specialist regional players, which meant it's also important for you to know there's a lot of good French companies and good good kind of UK, US companies, but they don't exist globally. So you might need specific people here and there to just do it. So keep that in mind. This is where all started because most people downloaded all the reports and came to us and say, hey, Baskar, what is the market size of FM? So if I go back and ask you what's the market size of FM, it's always going to be like this number, that number. So the past 3 years, we are trying to provide clarity on where the market size is. So what we did is we were doing a lot of pipeline projects, private, public, etc. Even though many people subscribe to a lot of these OU trackers, they come to us for their pipelines. And over the years, we were sitting with a lot of contracts. It's like, what do we do with the contracts? Okay, let's sum up all the contracts and let's see what the market says. And then, yeah, there are a lot of, FM, as you know, I strongly suggest there is a very popular webinar that we do, which is watched over 4,000 times. It's called Why the FM Market is Screwed. And one of the reason it's there is the definition of FM is very, very broad, which meant anything and everything gets allocated. One of the things that you find there is nearly 18% of the public sector tenders that are coming out as FM is not really FM, which means any OJU, any research company who just realizes that they adds up and they overvalue the other thing. So these are the high level pointers, but either way, we started monitor contracts, and based on that, we starting to project the market. So based on what we know, I know some of you already know the details behind it. You could find that in our report. So these are headline figures. We refresh it every 6 months. We have excluded PFIs, we excluded housing and related contracts, which was pseudo. But at a high level, these are some of the numbers that we are looking at, and this doesn't change. It's not like every 4 years. The market changes tomorrow, and while we can't change all the time, we do take a stab every 6 months and we update the records. At the moment, we say, most people say private and public. Yes, as the visibility of what we know. It's 3367 at the moment, but we are getting more and more private sector contracts. We have 3,000 contracts at the moment, and we're building more and more, which means that number will start to increase. The point I would like to share here with IFM thing is, while you find majority of the people projecting IFM is the fun word, is the best word, etc. It was, as you know, there is always a cycle that goes up and down, where IFM used to be good one, and then people don't want IFM, and then it moves into a little bit bundled, then it moved to single service, then moved to managing agent, then IFM. And in that cycle, every 10 years goes up, and we are in that phase of a bundled specialist at the moment, with some elements of managing agents happening as well. So keep that in mind and don't fall as IFM is the preferred, because commercial and office and commercial buildings, well, the most of the research reports and most of the insights that you have are biased towards the workplace, is changing based on real estate, etc. But that's all based on a smaller pool of commercial office building. There's a lot more estates that it's not covering. So primarily here, we are looking more and more on the trends here. But let's I've just added this slide. Obviously, there is a much more deep dive behind this. The renewals are coming up, especially if you're an office commercial building side. There are a lot of banking financial institution that's coming up for renewal in the next 6 to 12 months, and some of the buyers are looking at ways to improve how they could do differently. But the market is very, very, very active. There are a lot more renewals, but that comes with its own challenge, because one of the provider has at least 12 major bids, which were 400 million in the next 6 months that they need to save. So while you can go, we are growing at 12%, you just need to keep what you have before you actually grow. And so I am seeing focus is much more on new business, and there's not much on renewals, and they approach it in the same way, but we'll cover that separately. But either way, the market is buoyant. CCS pipeline comes on and off, as you know, so central government is still big. The healthcare new CCS framework went live on the public sector. Then on the office and commercial building, as you told you, banking and finance, insurance, etc. There's a lot more renewals that's going to come up there. Keep an eye on the market. So Pricing side is interesting because we only start post-COVID, we started to engage with the 50-50 buyers. And this is the stuff that came out with. And most of the buyers still looks at cost reduction at the moment, but they don't want just to cut the cost for the sake of cost. They are just expecting innovative, not innovation just for like, we are going to do smart buildings and stuff, which you're going to cover, but they also trying to look at how you can commercially price your contracts. The innovative pricing models are coming up. So performance-based contracting, we are already seeing a surge in this, especially in the private sector. Government obviously is central government. Obviously because the evaluation criteria, not much is they are restricted in what they could do. But what we are finding more is the in-sourced contracts before they actually want to in-source. They are trying to position the previous version before they in-source into performance-based contract. That meant it's kind of looked at pretty carefully, especially if you're in local government and NHS. Keep an eye on performance-based contracts. And in the private sector, it's happening because like us, there are a lot of other companies, big companies like McKinsey's, Deloitte, and others who are also finding ways to just improve the overall procurement model because of AI and other things. Keep that in eye. So whatever the service level agreements, your KPIs and risk sharing mechanisms that you have, you might end up having a shock when it comes to renewal because the buyers are now briefed heavily on performance-based contracts. If you're not updating yourself on how this is going to work, then there might be a challenge in renewals for you. So again, the point is already mentioned there. On the other side, I don't need to say the market is always going up, and whether you follow BDO, whether you follow Grant Thornton, the two most active um, advisors on FM market. There's a lot of acquisitions that's happening, and for the past year or so, the acquisition is already increasing. And if you go back and check, you can see that the uh, the uh, the acquisition has some strategic value, but what happened? If you look carefully, when you compare organic growth and acquisition growth, it's very interesting. For the past 2-3 years, companies who always have always acquired, and they never integrated the company, which means there is one example where there are literally hundreds of smaller entities of companies. It's a much multi-billion dollar company, but multi-billion pound company, but then it's never integrated any of this, which means they all go on well because they never position themselves to organically grow. They just keep adding. One provider acquired 6 companies already by March now. So what that meant is, whether you're PE backed or whether you have no debt, you're going to find a lot of acquisitions that's happening, a lot more than what it used to be. Typically engineering because of the high margin on it, and cleaning is also happening because when we looked at the 30 providers in London and Birmingham and the cities based, you are going to find a lot of kind of buyers looking at that because the next generation of those family owned are just giving up, which means we are finding like many of the industry leaders who are at the moment sales directors or MDs of companies actually taking a step back and say, hey, do I need to join the corporate sector or shall I go and buy a company? So we are also looking at interesting spins there where they're also looking to go there. So the point here is the consolidation keeps happening. The top UK FM players still consolidate 1/3 of the overall spend. But what you might need to be careful of is while you're doing acquisitions, when you come to due diligence, accounting is there, but ensure that you get advice on the growth. Where is your market positioning? Because there are a few scary stories that are happening in the market where when the joint entity looks at the collective growth, it's not as much projected as it is because there were lots of duplicates in individual pipelines of the joint entities, and then there were cultural clash, etc., which you might underestimate. But we are finding more and more of the bigger consolidation that has happened within the industry actually has lost a lot of good people because of the way it has happened. So you can guess who those companies are, but just leave it there. So the due diligence is not on the top end, but also do the due diligence, even because there are two levels of due diligence. One, okay, numbers wise, yeah, collectively what I could do, but on the second level, try to stress test it as well. Where we could help you on that. Then the other one is the acquiring companies over the years. We always find the integration challenges with it, and what it meant is, if you're we are finding this often. I touched that when we talk about renewal. So any company that is aggressively acquiring, if their contracts are up for renewal, those are the companies who are losing. Because the focus is on acquisition. So you become a target for losing your contracts, because there are robust organizations who knows how to bid for contracts, and they organically grow. And then because in your case, you haven't integrated the companies in the way that you wanted. So that is a challenge for you. So you heavily are going to be impacted on the organic business growth. We'll touch it as we go along. This is from our friends at Grant Thornton. So obviously the equity volume continues to increase and for the past year, and this pretty much will be at least the same level, or if not double this year, as I mentioned, because 2024, 25 will be pretty tough. So what that meant is there's going to be a lot of companies who's going to acquire to build up their gap in the organic growth. And obviously, engineering services goes on the top, but cleaning services is also followed up with that. So again, this is from a friend at Grant Thornton, but I thought they are nicely presented and how we present our data. That's it. And then you are also going to find the building softwares and stuff. The challenge with it is, yes, it's good, it's value added, but then positioning that to actually gain any revenue is always going to be a challenge. So again, I'm not going to go deep on that. So Renewal Challenges, what I thought is this, when we did the buyer survey, especially with 50 buyers who's up for renewal, normally we find 1 out of 10 or 2 out of 10 who just say, hey, we are thinking to change our suppliers. But this time, literally 2/3 are, like 1/3 are really like it's somewhere neutral. It's somewhere, yes, we are going to change the supplier to neutral, and it's only few who are actually saying, yes, we are going to retain. So that's not a good news for the industry, because as a supplier, you worked hard to retain a contract, to gain a contract, but there's something which you might need to go for. Again, buyers have their own reason. As I mentioned, they are looking at a new procurement model. They might be looking to decentralize their IFM contracts into bundled, or do the other way around, and they're going international, etc. But it's super important to build your relationships again, and don't rely on an NPS survey, because those are wide. Because in many cases, we found out NPS scores were much high, but then the actual relationships meant like that those are the contracts that you lose. So if you do NPS surveys and if you tap yourself on the back, just it's good, but that those are done for different reasons. And renewal, I'm repeatedly saying, please don't lose your market, because it's important. So this is the thing, we looked at 2.1 billion, and the retention is lower than what we anticipated. I thought it's going to be up this year, because during COVID years, everybody got extended, but some got for 2 years, some got for 3 years, and many of the contracts are now coming out in the market. And what it meant is, we are just extrapolating, which means 38% of the UK, the contracts that we monitor, 50 buyers, it's going to switch hands if they are not careful. And a couple of there are a few reasons that was put forward on these things. Number one is, while the suppliers win the contract, obviously the creative things about what you write on the bid stay static, and then operational contracts is pretty flat. And what it meant is your buyers are not really getting the enticing intelligence, or hey, this is why you are still getting value for money. This is why we are still best for you. It just being left for the bid, and then during the bid phase, we write all the good stuff. That period of you won the contract too. Yes, you have some interventions on performance improvement, etc. But the buyers are educating a lot more. Previously the sales team used to be coming, but as I mentioned, this webinar just an example where 23% of the people who are going to look at the recording or joined are going to be buyers. So keep it in mind. And then the renewal things. And if you have a new business opportunity, keep your renewals in highlight in red and focus as much as your energy on renewal as much as your new business, because it's very obvious. So there is not, when one buyer showed a response, it's they were, because remember, the buyers monitor your social media presence as well. So they are looking at who's moving from your company. They're also looking at what you post in there. So when you go back and say it's all great, our culture is amazing, etc., hey, they know what's happening, they follow what's happening. So it's important to just not just write, just think the buyer is a lot more smart at the moment. And again, engagement not only before renewals. I'm just giving you head tips just because we started with the suppliers, but I know it's what it is. The expectation, I've already shared that to you, with few clients that we looked at, that 50 that we had, the shift 1/3 are not actually going to continue IFM, because they are going to move into similar model like specialist bundle services, working with one hard FM supplier, one soft FM supplier, and one kind of an overarching thing that doesn't fit into both, like the energy and the other areas. So or they are looking at multiple suppliers for specialist things based on the regions. So CCS was one example how they have done it, but obviously that's a framework. But the buyers are also looking at a wider angle like them, because they just want to protect resilience. Resilience is key for suppliers, and they just don't want to have another scenario where you put all the ducks on one egg. um, but it depends on the journey of the, always look at the journey of your buyer before. If in the past they have looked over, we monitor contracts from 2012, so you could look at how it has just changed hands. If every 3 to 5 years they have changed hands, then obviously that pattern will continue. If a provider has been retained for, we looked at a private sector, couple of private sector buyers where they actually kept their suppliers for nearly 25 years. And what's the chance of them to let go of them? So is it worth even bidding against those kind of projects? Again, it's a question. So what we are finding here is, IFM is still there, but it's not going to be, preferred model as much as we thought so within the UK. But if it's a global deal, but keep that in mind. um, Again, a lot of people also get involved with managing agents and others, friends like CBREs, JLL, Cushman Wakefield, Savills, etc. Obviously, they go and scan and buildings. We have buildings data, like 5,000 buildings data. Some actually go and help one by one. Others, because of the regions, some actually go back and have their preferred supplier status with these, because obviously they are pretty active in the market. Um, but they are coming out with some very robust criteria on what you need to go for. Again, while not many people are directly or actually comfortable working within managing agents or within that model, if you are, there is a huge compliance that you might need to go for, which is now becoming mandatory, especially when it comes to ESG and other things. So keep an eye on what's happening. Again, these are moving parts. So what I thought is I'll take a quick pause here and I'll stop the recording and I'll open up for any questions. And also, I meant I'll break. I'll give you 5 minutes to say hello to each other. I'll create a breakout room, because most of the time you are here, in your own life, working with your own colleagues. It might be better you also say hello to a few friends other than LinkedIn that you have. So I'll pause for any questions at the moment. Anything so far. At the same time, I'll give you 5 minutes just to say hello. Say hello. No, it's a bad thing, and we will continue the rest of it from there. I see. So we are having a lot of drop offs. So obviously you don't want to say hello, but I don't mind. You can go back and see the recording. So any questions so far before I create a couple of breakout rooms, so you could say hello to your friends in the industry? Any questions? Obviously, this is a meeting. It's not a webinar. You could come out of mute and you could say, and there are a lot more insights that will follow after this as well. Right. I'll give you for 5 minutes. Just introduce yourself, say hello, get to know who is on the call as well, and then I will proceed further. Sites. Good. Yeah. Oh, and these are some of the things that you already know, but what's happening here is very, very, very interesting. There's one point that I want to highlight here, because when you are doing predictive maintenance, especially in what we are finding here is, we worked with a couple of universities recently on these are insourced FM services, where how they are actually, before they go for procurement, they want to create a kind of real-time maintenance spend, so they could see who's what, so that when they go for procurement, they have good data around it. So I don't know whether it's already happening within the sector or the clients that you're working with. So what we found out is within the 50 buyers, looking at, some actually demand real-time insights. Is, you might have some CAFM tools, but what's actually happening there is, here we go. I just want to go by location and say, okay, who's the supplier, what's he fixing? Whether it's reactive call or predictive calls, so it's just like, who's the supplier, what's happening, where's the spend, etc. So it's so many especially now with AI has come out with. So we are finding very, very interesting things that's happening here with predictive maintenance enrichment. When a new buyer tries to procure your contract, and the expectations is, yes, we want to have very transparent way of mechanism, your KPIs and the other things, where how are we going to find this from you? We don't want to have a monthly reports, performance reports, you say, on a slide deck or an Excel sheet. What can you do to give some real-time details? So again, keep that in mind and see whether you could do it, because IoT it's like, it's I mean, like, it's what it is. But AI predictive maintenance is not as hard as you think. It's when we're looking at for the university, it's like 16,000 pounds to 20,000 pounds. You have the data, you have to create the dashboards within the data, then you can connect it to any of the interesting language models, and that meant it also learns from it. So these guys already also get a little bit of reports that comes out of it. So keep in mind, when you are procuring any contracts or when you're advising any contracts, there is a shift that's happening because they want to know what's happening, right? And not like a generic stuff. Again, smart building is also, if you haven't done, please do have some partners who are good in that, because many managing agents in many buildings are really, really old, which means when a new build comes up, it's imagine the next phase of PFI2, which we will touch after this. There are not many takers. Many investors have pulled out. We have done a detailed analysis on the SPVs and also on who are the investors who are originally part of these things. You'll be surprised, not surprised, they're not interested in continuing PFI2, because buildings are getting old, and the unitary charge, which you'll touch, and the other things happening, which means if there are buildings that are old, you might need to consider partnering with sector technology providers to make that as a smart building, because the expectations are there. I'm not going to go in there. Sustainability, you already know, it's important. What we find, this is the thing. When it comes to employee, we always do will you stay, will you move survey just before Christmas. It normally reaches people on LinkedIn, and because our newsletter reaches 7,000 people. So primarily what happens here is, this time we went to 1,300 people participated, and for some reason, there's a lot of movements within the market. You might have looked into that, because we also scanned a starting new position of the FM players, the top 50, and these are the number of movements that you're seeing. I'm not explicitly going to say it's operational or it's accounts or it's sales or it's management changes, etc. But there's a flurry of people who are moving, who are moved, or will continue to move. So if you're planning your growth, if you're planning your targets and stuff, keep in mind it needs to be a joint team effort. And many of the people whom you are currently working might not be around to see it through, because they are not there. So, and this number was surprising, because I thought, this number will come down, and it'll be a lot more. People talk about workplace, and people talk about the future of work and people within the work, etc. But when we just looked at FM kind of thing, while it's all great, we go and this is a very honest. While we go and lecture about amazing work within the industry, there are a lot of people who are moving or moved or pushed out. So you can imagine things are not looking good. So this is from the highlight headlines from that. So why people move, before we used to look around at salespeople, but now it's happening at every level. From IT to, because upskilling is important. I'm going to touch that a little bit later. But if you look, a lot of people, the proposal team, or the bid team, as they call it, used to be a lot of moments used to be there because a new sales leader comes up, he brings in his old team, he removes the others, or a company gets acquired, him or her doesn't want to stay there because it's not the same anymore. But we are seeing a lot more things as well. For some reason, toxic relationship came out pretty top this time. That's it. So people also leave for different reasons, but compensation could be one. Again, there are details behind it. So what primarily it's easy for me to just say this, but there are two things. Number one is upskilling and reskilling your workforce as well, because your customers are going to buy it differently. Right, your customers are going to buy things differently, and when things change like that, how are we actually going to educate our customers or educate our own workforce about where the market is? Yes, the reports get downloaded by the marketing team, but your operational team, your health and safety team, your IT team, and even to a certain extent your big team, not necessarily know what's happening in the market. So upskilling research, you're buying an acquisition, you're doing this, but is it trickling through to the wider thing? This is how the collective entity looks like. No, in most cases, employees actually learn a lot more about their company from social media than actually within the thing. So and the other thing that came out is more and more people who are 50, 55 plus are actually taking early retirement, which meant, while you can talk about apprenticeships and stuff, the pressure is very much high on people who are 35-ish all the way to 55-ish. They are actually doing a lot more than what they're supposed to do, because there is not many people coming in, and there are not many people around the age of 55 who are there for them to support. And that's tough. Whoever's staying needs to be upskilled or reskilled, and there is not many people coming in, and then the people at the top who have seen it through all along is leaving. And that's the state of the FM market. So it's so great that we go and talk about workforce, etc., but when you look inwards, it's not it's another challenging thing. So while we do a lot of training and other things, even when we go and do market insight sessions, when we go and do kind of a voice of the customer stuff, we always tell them, okay, don't just restrict it to this team, and ensure everybody, you have top 100 leaders, top 250 leaders, bring everybody together, so because they can learn and they can trickle it through their own team. But most of the time, it just held up with the CEO, the board, or the next level leadership, and it never gets trickled through. So keep that in mind. Especially upskilling AI is very, 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 very critical. And one of the things that I want to share with people who have left, you missed it, is there is a flexible AI upskilling fund that's been created by the government. It's like 20 million pounds, and we are there. Because we do AI Python training for the IT team. We are doing AI proposal writing for the big team. We are doing AI data analytics for the dashboards and the finance team, etc. So primarily, there are grants available. So your AI upskilling, you don't need to pay any money. So while in the past apprenticeship level, you can put a tick. It's just, it helps on the tax, it helps on your social value, but when it's genuinely skilling, it's not. So maximize this fund that comes up. It's there are expression of interest. It goes live in April, after Easter. So keep an eye on this. And if you're a smaller company, 1 to 9 or 250, or the definition of SME, you can do it. Or if your business unit is as its own limited, you could be part of a bigger company, but if your business unit as a legal entity is worth the X, you could tap into this, which means you can get access to us and also get access to other things, which means you could get this funded. You could get this funded. So commercial, as you always say, there is a lot of content that talks about, okay, an office in commercial building, but that's not everything. What happens in manufacturing, pharma is very different. Logistics, when we start to look at recently, the Amazon, their presence have increased 3x, 3 times in this 3 years in the UK. And none of that is actually, they still have local suppliers who are going to look. So logistics is transformed. While they are doing all this technology within their own operations, the FM service providers are still local. So we could go in depth when we look at manufacturing, pharma. So when we look at public sector, everything is unique, and it's not covered at all in any research report. But we have Again, go back to the events page and look for specifics around it. CCS, we have done in depth on this on central government. Local government insourcing, 18% insourced. If you're in London, NHS, tough, soft FM, because it's going to be insourced, and local councils, a lot of benchmarking is happening for any contracts that's being procured in the next 2-3 years. There's a lot of political pressure. Keep that in mind, NHS logo. And we have covered all these things. Schools, the new schools program, how many of the schools are broken down, where is the FM spend going there. Higher education, as I mentioned, very, very, very performance based now, and they're looking at analytics as we speak. If you haven't missed out on CCS frameworks, keep an eye. They're consolidating more and more. These are some of the live frameworks, and these are some of the upcoming frameworks. Keep an eye. If you're an estates provider, ensure you go in there. If you need help, we are happy to help you there. Get in there, because while it's great, the managing agent public sector buildings are much, much more than what you find on the private sector buildings as well. Defense estates or schools or central government buildings, you name it. There are a lot more which covers on the estates here. So anybody who are bidding, this is another thing that came out on the questions. If you are bidding for a public sector contract, and if you want to question, hey, I want to review the procurement. Remember, this is not just applicable to central government departments. This is also applicable to anything. If you want to say, I am unhappy with the way this procurement has happened, there is a public procurement review service. This is PPRC. I think it is important for you to utilize this, raise it, because in a couple of procurements in local councils that we saw recently, PPRC actually stepped in to just say, hey, the local council, the way you procured this particular tender is actually is not the right way. So please, can you ensure you do it in the right way? And then they have to go re-procurement, which were monitored by this PPRC. So if you are a prime contractor, or if you're bid for any contract, look into these things. But obviously there are a list of what they can't do, but it's worth looking into this. Today, fresh, the procurement thing came out. This is from our friends at PSA. If you're a member of PSA, you know, but this is the thing. So today the Cabinet Office officially published guidance notes for contracting authorities. So it's there. Go back and check it out. What does it mean? Where's the procurement? And more or less, everything will be published around June 2024. If you're bidding for public sector, when we talk about central government in depth, we will cover on what the Procurement Act means and how this is going to work. But this is published today. So PFIs, and then we can start to close. There's a lot of PFIs, and many of them are expiring. These are by sectors. And as you can see, it's coming up where we have 21 all the way to 29 to 10 years. But let's look at it this way. If you look, this is the activity of the PFIs. If you look at the collective spend, this is where it's surprising. 57 billion. 57 billion. The capital value is huge. And it's there. So what you find here is, while it started gradually, the expiry, and they're working on it at the age of 2040, the next 10 years, at an average, there'll be 30 projects that's going to expire and going, which meant many of these projects is not a tender, it's not a contract. It'll be expired, and whether you can buy back that PFI and continue for the next 20-25 years. For that, the existing player, if you have a PFI contract that you already have, important thing is you just need to be prepared for this PF2, to have all the assets in place, to have the what we call performance indicators, your contracts and everything in place, and then do it. As I mentioned, many of the investors are pulled out, so they won't be continuing this. And also many of the players who used to be pretty active, because they got merged and bought out by bigger players, and these bigger players are now pondering, do we need to continue to play on this? Most probably they won't. The reason why they won't is this one. Because the unitary charges of these PFI, which used to be the amount of interest plus what they need to pay, will hit its peak in the next 5 years. If you think PFI is loss making, wait for the next 5 years, and it's going to go. I don't know. And this is the reason. Anybody who's involved on that are scratching their heads and say, do we need to continue or do we need to give up? Many of the loss-making contracts, they are still making loss because they can fix it, but they are unable to fix it because a lot of things are happening. So if you are an organization looking for PFI assessments, or if you're looking at how the whole plan is going to work, who are the investors, how you can approach, who you can enter, drop us a line and we'll see what we can do. Sometimes you always get this, how many of you heard of Tussle? You might have used Tussle in the past, and many of the government suppliers use Tussle. Obviously, Tussle is a good government data aggregator, but you need to know FM to really understand what you need to do. So which means every single Tussle subscriber comes back to us for pipeline development and market insights, mainly because the details that they come out has as a top end will look great, but when you scratch the surface, you look a lot of noises within it. This is just a quick one which we did last year, just because one of the big supplier who spent £60,000 on them came back to us and said, hey, you know what, we are not sure about the numbers, and then we need to go with them too. And this happens all the time, which you're just like, okay, it's like, what is a FAM? And based on that, you can just go back and do it. So there's a lot of challenges that's happening in the market, but obviously the trends which I covered, it's a consolidated thing where it could be how the pricing going to work, or it's going to be how the renewals are going to be challenging, or it's going to be how the performance, real-time performance that's going to come, or is IFM still going to be the key, and the employment challenges that we looked at, and also the further things that we looked at on the PFI and the government side. Again, I handpicked some of them so that we could have a good one. And winners and losers will always exist. And it's like many companies use one-off strategy. They just go, by the time month 2, month 3, it gets outdated, and you can't always keep updated with what's happening. And that's where we come up, step back to you and say, hey, what's happening? We just help you with finding it. So there's a lot of changes that's going to happen. As I mentioned, consolidation will continue to happen because more and more companies will try to balance their books, because the projected growth of what they are going to do will have a much more larger component of acquisition. And the organically grown companies will be looking at the companies that are actually great at acquiring but not great at renewing their own things. The best in class bid engines will be looking to take away those contracts away from them. So it's what that meant is buyers on the other side are also looking at new breed of suppliers, because they are educating them a lot more than what they used to do, because they are very, very clear in new way of working is the way forward. And that's it from me. So I thought I'll have this, and if there is any questions, we'll continue from here. But thank you for joining. It's not a webinar, it's a meeting, as we did. Looks like I switched off a lot more people when I say let's have a chat. Well, I think it's important to have the conversations going, because that's what is going to help us to progress as an industry together. So I wish you all great Easter holidays, and I'll pause the recording, and I will be here for any questions that you have. But thank you very much for joining, and let's open up for questions. Obviously, this is people who are going to access the recording will be out to you with this link, and then you could share it to any friends that you're going to watch with that. But there are a lot more videos which you have gone deeper on the market, specific markets or specific services, or main reason why it's pretty hard to just why there are so many moving parts in the industry that actually pushes this industry down rather than pushing it forward. Yeah, that's it's all there for you to just do that. But otherwise, I'm there for any questions now, and the recordings will be shared with you, and anybody else who have missed it, drop me a line and we'll go from there. So thank you for joining.